In a shocking drop, Bitcoin briefly fell below $30,000 for the first time since July 2021. The value of the cryptocurrency that was once the largest in the world has dropped by more than half since the fall. There has been a general decline across the board in cryptocurrency prices and trading volumes on the most important exchanges. The constant decline in Bitcoin value begs the question, why? Should this cause anxiety among investors? No worries, Crypto World has got you covered. Both short-term and long-term factors, such as larger financial markets and the crash of a major stablecoin, have contributed to the recent decline of Bitcoin and other cryptocurrencies. Bitcoin is integrated into the global financial system as a whole. Bitcoin, the leading cryptocurrency, is issued and managed entirely independently of any central bank or government. Many people have argued that Bitcoin's lack of dependence on any central authority means it will be resilient to market fluctuations, national or international conflicts, and significant shifts in monetary policy. However, the past few years have disproved this. Bitcoin dropped by 57% in March 2020, when the worldwide market collapse was caused by the coronavirus pandemic. Analysts believe that the combination of free time, disposable income, and government-pumped pandemic relief money led to a rapid recovery and rise in stock markets and cryptocurrencies. The Federal Reserve and other central banks have raised interest rates in response to inflation, making investors nervous that change is imminent. Cryptocurrencies like Bitcoin, which are notorious for wild price swings, may seem too risky to investors seeking stability. Bitcoin has experienced its worst decline in over a year. Since Russia invaded Ukraine, inflation, supply chain problems, and oil prices have all worsened, and the market has become increasingly unstable as a result. Slower growth in China due to COVID-19 outbreaks is also adding to economic concerns. The value of crypto is highly unpredictable. Even the most enthusiastic proponents of cryptocurrencies will tell you that your chances of being successful in this industry are low. Many speculators are drawn to the market due to the fact that they can potentially earn returns on their investments that are significantly higher than those offered by traditional stockbrokers. The potential for a bust is always present alongside the hope of a boom. Since its inception in 2009, Bitcoin has experienced numerous major bear and bull cycles as short-term investors flooded the market and then lost interest. During peak periods, many exchanges present traders with high-risk opportunities by allowing them to trade using borrowed cryptocurrency. If prices begin to fall for any reason, such as large investors selling off their holdings, a lack of actual cash flow can exacerbate the drop and has the potential to cause a freefall. The number of people putting money into cryptocurrencies at any given time is highly unpredictable. Concerns about rules and security breaches. The value of cryptocurrencies comes in part from people's faith in them. Changes in public perception or regulatory frameworks have the potential to cause significant disruption to the markets. For instance, Bitcoin dropped from $65,000 in April 2021 to $35,000 in June 2021 after China cracked down on Bitcoin mining. When Elon Musk said in March 2021 that Tesla would stop accepting Bitcoin payments in May 2021 for environmental reasons, the total market capitalization of cryptocurrencies dropped. Many cryptocurrency investors have been keeping a wary eye on the regulatory efforts of major crypto trading and mining hubs like the United States, China, India, and Germany. Meanwhile, a wave of hacks and security breaches has jolted the cryptocurrency market, with one attack on the Ethereum sidechain Ronin stealing $600 million. The public's faith in cryptocurrency has been shaken as a result of these hacks, which have stifled interest from potential new investors. According to Edward Moya, senior market analyst at Awanda, the number of real-world use cases that would bring newcomers into the crypto space appears to be slowing. Many people think it will take much longer for Bitcoin to become widely used than they had anticipated. What we're seeing right now is that the crypto market is in a wait-and-see mode. UST. One of the largest stable coins, UST, Terra USD, has recently experienced difficulties that have contributed to the recent decline in Bitcoin's value. The price of Terra USD, a token whose value is fixed at $1, fell below 70 cents as holders dumped their tokens in a fake bank run. The Luna Foundation Guard, which protects the stable coin, spent $850 million buying Bitcoin to replenish its $1.3 billion Bitcoin reserve in order to maintain the value of the UST. It is uncertain if the cryptocurrency market decline will continue. As investor anxiety rises, the situation may worsen. However, after Bitcoin's price dropped below $30,000. Its price corrected as believers bought the dip or entered the market at a reduced price. They anticipate that Bitcoin, despite its day-to-day volatility, will maintain its long-term growth pattern seen over the past decade. What a pessimistic investor would do at this juncture is unclear. In financial markets, one can short an asset by betting against it if one is convinced of the asset's depreciation in value. Going short. Selling something you don't actually own is called short selling. You borrow it, then sell it at a higher price, hoping for a further drop in price. After that, you buy it cheaply and return it to the owner. You enter into an agreement with an intermediary who trades stocks or other commodities. He lends you some of a commodity on the condition that you sell it back to him at a predetermined price. As soon as the price drops, you repurchase it and take it back to the broker. Your profit will equal the sum of the purchase price and the selling price. You are the risk of losing money if the price drops after you buy it. It's also possible that the cost will increase, causing you to lose money. It's important to remember that your broker won't let you lose more money than you can afford to pay him back. His primary motivation for helping you is to collect money from you in exchange for lending you his property. You are probably aware that cryptocurrency markets and more conventional financial markets couldn't be more dissimilar. Exactly how does a short sale of Bitcoin work? Margin trading is the simplest and most convenient way to do this, though there are other options. It's common knowledge in the world of conventional finance, and it's also widely practiced in the realm of digital currencies. A cryptocurrency trading platform will allow you to borrow funds on credit to use for trading. With this chance at your disposal, you can engage in trades with sums vastly greater than your starting capital. Supposing you have access to a 10-to-1 margin on some exchange, you could potentially double your investment. Consequently, if you start with a balance of 1 ETH, you will have access to 10 ETH. What this means is that both your potential gains and losses will be multiplied by 10. Different markets have different leverage rates. For instance, the HIT BTC exchange allows for either 1-to-3 or 1-to-10 leverage when trading via their specialized MetaTrader 5 terminal and the margin trading option. But how do you use margin trading to short Bitcoin? If you choose to engage in short selling a Bitcoin on margin, you will need to borrow some Bitcoin. If the price of Bitcoin drops, you can repurchase it with the money you manage and close your position. When you're done with the loan, give the money back to the exchange. You will have made a profit equal to the difference between your purchase price and your selling price once all of the transactions are completed. It's worth noting that each exchange has its own safeguards in place to deal with the risks inherent in this sort of collaboration. If you incur a loss in trading operations on most exchanges, you will be unable to trade once your losses approach your initial deposit. Can you currently rely on this being the best plan of action? Short-selling subprime loans were one of the few options available to the protagonists of The Big Short, a 2015 Hollywood film starring Christian Bale and Brad Pitt. They had done the research and were sure that the housing market was about to crash, but no one would listen to them. By betting against the housing market, they made a tidy sum. Things are different now than they were before. Bitcoin's price over the next few months is difficult to predict. The falling tendency may continue for a long time, or it may finish soon, and we will have the bull market going on again. The cryptocurrency bull market is inevitable. Making a long-term investment in cryptocurrency is the best option right now, but that depends totally on you. If you are a pessimist who is confident that the cryptocurrency market will crash, you can start short selling. For any market, the growth phase usually lasts much longer than the falling phase. Is now a good time to go short on Bitcoin? Tell us in the space provided below. As for me, I'm calling it a day. We hope the video was entertaining. We can't do this without our fans, so please subscribe to our channel to see more of our incredible critiques.